you gave was that you can't, and as far as your credit history, no late payments within the last 5 years. Does that mean that if you have a late payment within the last 5 years, you won't be qualified?
It should be no late payments in the last 6 months to a year.
That makes
it's bankruptcies and
Oh,
foreclosures in the last 5 years.
got it. Okay, that makes more sense. Okay.
Okay. Hey, so Derek, just to catch you a little up to speed, Mitch here is, from what I understand, Mitch, maybe you can correct me if I'm wrong, is an owner, and I don't know if you started it, Mitch, but from this company called FundWise out of Salt Lake City, I believe. And I got on a call about a week and a half ago-ish, maybe a week ago now, with Dane. Dane reached out to me and said, hey, there's this awesome way for people to get funding. And so I'm checking it out for myself, but also PK is also checking it out. And I want to know, I really want to dive in and try it first prior to, and it would for us, it would be something that, high level people could tap into, but this would not be something that we would really put on the front end at all. Not really, just seeing the process first, going through it, and then if it's smooth and I can be the guinea pig, and we can go from there.
For TradeRinger?
For TradeRinger or whatever the person wanted to use it for. If they want to use it for Compass, they could too.
Or they're personal. Doesn't even have to be for this. It's just a way of getting people money up front that a lot of people could use and need. And a lot of times, and I don't know, maybe I don't. Maybe I'm talking out, but I think a lot of times you can get 11 to 18 months interest only, right, Mitch?
0% interest, yeah. So there's an interest.
I mean 0% interest.
Let's dive in a second. Let's pump the brakes. Before we go into the numbers.
Okay.
Because we're going to say it again. Let me make sure. I don't know why these guys are late, but come on now.
Just run it, and if they hop on later, they hop on later.
What are you talking about?
Oh, I thought it was just Canoa.
No, and my dad. PK, the link is on Facebook Messenger.
Yeah, Mitch, I guess it doesn't matter whether you own or rent, right?
No, doesn't matter. Yep.
Okay.
I mean, it's pretty basic as far as qualifying, right? It's just a matter of getting the clients to qualify, and we can kind of dive into that. But yeah, I mean, it's the only time we don't see, like, for example, today we had a client who had an open collection. They needed to go in and pay the collection off, and then they have it get closed, and then their scores rebound, and then they can qualify for funding, and that could take just a little bit longer than your traditional client qualifies or client that doesn't have an open collection. So we have clients that come in that we can kind of tailor their situations for them specifically to get them in a position to then get qualified for funding.
Okay. And Derek, what's nice about this program is it's basically we just bring them the referrals, people that want to, and then from there they take it from there. So it's not like there's not much more we have to do on our end. We bring people to them. There's a little application that you send them the link that's linked to you in case they get qualified, and then FundWise takes it from there, which is really appealing.
This is great, Mitch. Dean, could you put us in a Facebook chat or something after as well? Just because it's always great to have a connection to someone that has a funding company.
Do what again?
Just connect us on social after as well.
Oh yeah, absolutely, yeah.
Cam, can you hear me?
Yep, yeah, we can.
Okay.
Well, I know that everyone's extremely busy. We got a lot of calls and stuff. We wanted to sneak this one in. So for everyone that's on the call, Mitch here is out in Salt Lake City. He started the company, from what I understand, FundWise, maybe with a couple other partners, I'm not sure. But he basically is the process is very, from what I understand, is very simple, and it's, I don't know if it's hard money lending or what the deal is, but Mitch, if you could give kind of the basic overview, and then we can start to ask some questions, and then go from there.
Yeah. So we have been in business since about 2016. We help facilitate clients in the startup funding space and also existing business space. So totally depending on where the client's at in their progression of whether they're starting their business or they're already in business, we take that client's information and run them through our machine learning algorithm that allows us to know what the client can get in funding. And we have different sources of funding. So if a client is coming through your guys' program that wants money to invest in maybe their educational aspect or wants money to invest in growing their business, we can then utilize a couple different strategies. We can utilize their credit profile, their credit history, where they live in the country, because we have different relationships with different lenders based off a geographical location. And then we can match them up to those best lenders that are going to be based off of those criteria. Now, if it is startup funding, we utilize their personal credit profile and get them anywhere from 4 to 6 different credit cards. These credit cards are 0% interest for up to 15 months. They can utilize them by swiping the cards. They can pull the cash off of the cards. They can utilize them, with checks. However they use the money, they can. If they're currently already in business, we can leverage their business revenues to help them get working capital loans or maybe traditional lines of credit. Again, I think Dave mentioned this earlier, but we've made it very simple for you guys. You guys have custom landing pages where you would just submit the client's information to, or they can fill it out, and then the client comes to us. So we don't ask you to be a financial wizard or guru on knowing all the different financial products. All we ask you is to put the client through your process, through your landing page, so that way it links back to you. And then our entire front-end sales team takes that client, walks them down the path of funding, and then we get them the best funding that they can personally qualify for, depending on what situation they're in.
Okay. What are your landing pages, like how are they linked? What hosting platform?
We've created our own. We have our own back-end CRM that you guys get as partners. I believe Dan has seen it. I'm not sure if anybody else has, but it's just your own custom landing page. That's just apply.fundwise.com/. It can be your first and last name or a business name. And then it's just a series of questions for them to answer. And then that client's information comes into our system, and then we actually work the lead from there.
Okay, cool.
Yeah. So, Mitch, if you could give us the kind of an example of the types of people, well, not the types of people, but like the situations that someone is able to get a loan, whether it's like the perfect person that's like pretty much automatic, and then someone who, maybe has the income but doesn't have the credit score, and then maybe and then the opposite as well, someone who doesn't have the income and then has like an okay credit score.
Yeah, so ideally, our ideal client would be somebody that has, a 6. Let's just go kind of the high end, right? Someone that has a 680 credit score. They have no derogatory, so that means they don't have any collections that are open, no late payments, and no more than 6 inquiries in the last 6 months. Inquiries are kind of a touchy subject because someone could have gone out and applied for a car or a mortgage, and those look different to lenders than they do for applying for a bunch of credit cards, right? And so we'll go into that kind of a little bit deeper with the clients. But this is kind of your ideal top of the line client where it's a 680 credit score, no derogatories, no more than 6 inquiries in the last 6 months. And the biggest thing that we need to have here is they need to have some open credit cards, open accounts on their credit history. Now, you guys aren't going to be able to see that because you don't pull the credit report, but we pull the credit report. But it's a series of questions that can be asked on the front end. If they have 2 or more open credit cards of $2,500 or more, that client is going to receive money because they have established credit history.
So more than 2 credit cards with outstanding balances of $2,500.
Limits. So they're limits of $2,500 or let's just do limits of $2,000 or more, right?
And outstanding balance would be good because then it's
okay.
Utilization would be high, yeah. So so limits is what we look at, right? So they need to have at least 2 credit cards of $2,000 limits or higher, and that client is going to receive some type of funding from us.
What's the spectrum of funding you guys have done before, like in terms of minimum to maximum?
5,000 to 500,000.
Okay, cool.
Yeah,
you guys have loaned like $250 million since the inception, I think, right?
Since 2016. Yeah,
Okay.
April this year, so I'm sure
On
it's
an
higher.
individual basis, the most you've done is 500,000.
Yeah, yep. We got a client, so that's at a one time, right? We got a client that started with us last November. He is taking his next round of funding in the first week of August, and he'll be over $1 million total for him since inception of him coming in November, right? But he's a client that's kind of the outlier because he has revenues, and his revenues have increased every single month because of the money that we've been able to help him get, that he's been able to use those revenue sheets to get more money. So it's just a client-by-client basis. And the nice thing with our program is if you guys send a client in that's just, in the very beginning stages of their business, we can help them get the startup funding that they need. And then once their revenues are where they need to be to get more of a working capital revenue or loan, we can continue down that road, and then you guys continue to get paid for that client that you sent to us. So it's not uncommon that our partners get paid 3, 4, 5 times from one individual client because they keep coming back to us to get more and more money.
Ideally, this is something great for even realtors, people that or even someone that just buys a house and then they need extra money to fix it up. I've got a realtor that's going to be doing one, and his idea is he's going to buy the house and then use this funding to fix the house up, get it what's the word?
Rehab.
Yep. And then get a full loan for that and be able to get interest free for 18 months of money to fix up a house. And then also if I bring a client to you 10 years down the road, that same client decides they need a loan again or want a loan again, it's still linked to me, right? And I still get the credit for them, correct?
Correct, yep.
Okay.
So it sounds like you've established FundWise with relationships to kind of a consortium of different funding sources. And do you guys have do you have a specific deal appetite or like, it sounds like it sounds like it's very, very, the scope of like what you guys would be willing to fund is like very wide. It doesn't seem like it's very niche.
Yeah, so as far as we have a marketplace, right, for the lenders. And so what we've done is we've made it easy for any client to come into the door and get funding that they can qualify for, because it's hard for you guys. Your guys' expertise isn't funding, right, or financial spectrum. We want you to be able just to send a client in, and we take the client and then we put them down the right path for funding, whether that's hard money for real estate, whether that's getting $10,000 to buy a coaching program or an educational program. We want to facilitate you so that you can just send the client in, and then we put the client down the right path. We've done it where we specifically target just equipment financing leads. But the problem is those leads still need maybe upfront money that can go through our 0% package, right? And so it's too hard to just be super niche in any type of financial category, because it gives us some more options for you guys to be able to facilitate that client in any area or any spectrum they're coming into.
Yeah, and I think an ideal situation for this is not that we push it on people. Myself, I think I'm just going to be able to offer it to my team. Like my best friend, he's applying for a $10,000 loan because with he put $5,000 in his trader 2 weeks ago, and now he's got $7,000. He's got $7,100 in it, so he's on cloud 9. He's like, man, if I only had another 10 grand. So I didn't say, hey, you need to do this, but he's like, do you have any other way of getting upfront money? Well, I can send them to you guys. Again, I think as long as we're not pushing, hey, you guys should do this, because obviously, that's not the right approach to go. It is a risk. Everything's a risk. But
and what we want to do, just to get this out there, anything that we bring to the Market Hacker community, we want to make sure, obviously, that it brings it's the value is there, and then like an affiliate side and stuff like that. That's like so. We're kind of past adding affiliate sides, and so if it does, that's great. But we're not thinking, okay, affiliate, how can we get as many people as possible? We're thinking, okay, high level leaders, people that are responsible with the software, people that maybe like me, I don't have $20K in the bank to throw at the software. I would if I did, but I am bringing in a decent income right now, so I have an okay credit score. So I'm thinking, okay, if I could get 20K, then that would immediately start to compound. I get that compounding happening a little bit faster, and I know how to use the software.
Right.
I'm not going to crank the dial on my FundWise loan that's in my software.
So just to bring clarity, this call cam kind of like tailored towards vetting out this just as an option for bringing people specifically to market hackers, specifically with trading, or
it's more so for you guys to understand how you guys could potentially get a loan, and then if you want to apply, you can. I'm going to apply. From the affiliate side, we'll dive into that once we see, like, let's say I'm the guinea pig and I'm able to, and I'm happy with the process. I keep you guys updated. I just want you guys to know that I'm going to try to get some funding here, and we can kind of go into that stuff later.
Well, it's also, I think, just in general, with people in our business that I'll use, for example, like you look at Jesse Cameron, right? Jesse Cameron is a very skilled trader and is running demo accounts of 20, 30, 50K, and he just doesn't have the actual income, right? There's probably a lot of people in our group that would like to be able to actually be trading on higher amounts, but don't have the ability to get funding.
Totally.
Right. That's ideal for someone like that who would use it smart. Do it smart.
And I think to just pipe in a little bit too, that the benefit too is like Cameron said, if we can get Cameron $20,000, that $20,000 is dispersed between 4 to 5 credit cards at 0% interest. So he may only decide that he wants to use $5,000 now, just to kind of put that in there and get his feet wet into the trading software, right? He still has $15,000 that he can use. So if that $5,000 goes well, he can pay that off and keep using that $5,000, or he can put more money in. And the nice thing with our funding is that after they pay our fee for the program, they only pay 2% of the amount that they use. So if you spent $5,000, you would only be paying $100 a month for 3-4 months while you're kind of getting the software up and going, and then making a return to pay that $5,000 off.
Is that a kind of do you have like a pretty cookie cutter deal structure for like everybody that comes through, or is it like any like below a certain amount of funding is it's done through credit cards, and then your higher funding limits, like you funded someone $500,000, is it all structured as a loan, and is there a lot of variances, or is it pretty cookie cutter?
It's pretty cookie cutter, yeah. I mean, if someone doesn't have revenues, they're not going to get higher approvals or higher loan amounts. If someone doesn't have verifiable income, they're not going to get a personal term loan. So the only option would be credit cards, right? And so we have a series of pre-qualification questions that we ask the clients to then make sure we get them the most amount of money that they can qualify for. Your introductory clients that don't have verifiable income, they're going to just get credit cards. But once they get revenues coming in, then they can get more traditional working capital loans.
But if it's a traditional capital loan, then they're not going to get 18 months interest free, right? That's really only on a credit card situation?
Correct, yep.
Okay.
And again, I think what's important to note here with our program is we're going to get everything from the client that we need to get them pre-qualified. They'll have an appointment with one of our senior funding advisors, who then will present to them, hey, here's your pre-approval. It's up to them at that point to make the educated decision. So whether it's you guys or someone on your team, they may come back to you guys and say, hey, this is what I'm pre-approved for with FundWise. You think it's a good option to take this amount and then put it into the business, right? So they're going to have everything that they need when they meet with the senior funding advisor to then make the decision on whether or not they should move forward with getting the funding or not.
So let me ask you this hypothetically, because on a commission side, we get 20%. They have to put 9% down of the loan value, which can be factored into they can be factored into the line of credit or whatever it is. So let's just say hypothetically, so someone gets $100,000, I get $2,000 of that or whatever, then they get an interest only for 18 months, and they pay that off in 18 months. How it's almost like there's lost money somewhere because no one made any money off of them if they paid it off within 18 months. You see what I'm saying?
Yeah, I think I see what you're saying. So with the client, so the lenders, these lenders can be regional banks, local credit unions, or big national banks, right? They obviously want to see the clients not pay everything off, but we advise you to pay as much off as you can during the introductory period. Some clients aren't going to be able to do that, so they are going to have to then pay their 2% monthly payment. Half of that's going to go to interest, half is going to go to principal. So at that point, the lender is making the money, right? And then obviously a lot of these clients, if they're smart, even if you have an interest rate after your 15-month period, if you don't pay it monthly, you're going to pay some to the lenders. But you can do it in a strategic way, and we can get into this later, but you can do it where you don't pay interest every single month, but still max out your credit cards every month and not pay interest to the lenders, right? But the hope is the lenders are giving these introductory rates that you are still going to use your credit even after your introductory period with interest rates, and that's how the lenders are going to make their money.
Okay. But there would be situations where that would happen. Like, let's say in Cameron's case, let's say Cameron gets a $20,000 loan and he's making $4,000 a month on his trader or whatever. He pays that 20 grand off in a year or in whatever. Then hypothetically, no one really made any money off of Cameron.
Well, it sounds like there's a 2% monthly payment that people pay during that no interest period.
But it's still, if it's no interest, then the companies aren't making any money off of you. You see what I'm saying? For the first, if it's 18 months or something like that. I'm just saying there's kind of a loophole there where the person who brings them in can get commission, can get paid on that, and then that person pays it off within 12 months or 18 months, and that the person that brought them in is the one that kind of made the money.
Yeah, so kind of just to clear that up a little bit. So the $20,000 is dispersed between 4 to 6 different credit cards, and that's 4 to 6 different lenders, right? So the lenders in America is the only country that does a 0% credit card. Every other country starts out with like 13% interest, right? Because the lenders in America want to capture the client, get them into their program, and then hope that they don't pay it off during the interim period, right? But hopefully we're kind of smart enough that we can pay this off, like you're saying, is that if Cameron went and took $20,000 but then paid it off in a year, he would pay 0 interest. But those lines of credit, those 4 to 6 new accounts, aren't going to close after 15 months. He's still going to have $20,000 available to him to use. So he might use that, have a 20% interest rate that only is applied if he carries a balance month to month to month, right? So he could still technically, I have some real estate investors that use credit cards for house flipping that are in their year 3 have 25% interest rates, but don't pay interest because they use the line of credit and then pay it off every single month. So it all just depends on how they utilize the credit to their advantage, right?
Okay. But
you're exactly right. I mean, the 2%, like he mentioned, is only paying a small percentage every single month. So if you're paying 2% of $20,000, you're only paying $400 a month. During the 0% period, that $400 is going right to principal, right? And so the next month you have $19,600 as your principal balance. You pay $400 of that. So there's no prepayment penalty with 0% credit cards. You can pay the balance off at any time. What's nice is as you use them for the course of the next 15 months, the lenders will see that you use them, and so you can increase that limit. And these lines never expire. You would be the one that actually would cancel the credit cards if you wanted them to expire or cancel them out. You can continue just to use those funds month after month after month. With FundWise, we spend some money on marketing, and we have credit cards that we use like $50,000 a month on marketing that we just roll every single month. They're out of their introductory period, but we pay that balance off every month. So it just has an open open trade line that we can continue to use month after month.
Plus, it probably helps your credit as well. It helps your credit every month that you're paying on it.
Exactly. Yeah.
So, are the credit cards when you do these, these loans via credit cards, are those in the client's name?
They are. Yep.
FundWise is basically just facilitating that process and probably making it a little easier to get those approved.
100%. Yeah. So there's 2 different approaches, right? If they have an EIN that's been established, we can do some credit cards in the business name, so that it's a blend of business and personal. But yeah, so what we've done is we've created a platform. Instead of you just going on Credit Karma and applying for the top 5 credit cards you see, you may get approved for one of them. But we have, with our algorithm and all of the clients that we've put through funding over the last 3 years, we know what lenders look for. And so we can match the client up to the best 4 to 6 lenders for them to get approved 99% of the time. Instead of you guys just going out and shopping out five of them and then getting approved for one of them, we can go shop out 5 of them and get approved for 4 of them.
Yeah, not shooting in the dark. Is it possible to take your guys' affiliate funnel that you guys already have created for other affiliates and use all of the same lead gen, copy, everything like that, but just have it white labeled with our branding, right? So like our company's market actors, for example, we have a community of tens of thousands of people, right? So if we were to drive traffic to an affiliate funnel rather than it looking like your company, it's Market Hacker Lending. You know what I mean? So it's just be a white labeled serve as like a third party affiliate. So it's the exact same thing, just from logo, brand, design. When they're opting in, it just appears like we're a subsidiary of your guys' business.
Yeah, 100%. And the nice thing is with it tracking that way through those funnels is it'll come in as market hackers. And so our front end sales team can still say, hey, I know that you're working with market hackers. Let's get you pre-qualified. Let's get you moving through the process. And
get
them the funding.
All of the actual back end, the system, all that can completely remain the same. The only thing that would change is the actual literal design on the pages would be native to our company. That's all I'm saying.
Yep. Yeah, 100%. We can do that.
Okay, sweet. Guys, this is something as well we'd want to bring T-Mac on as well. Because it's a whole nother vertical for our company.
Yep, 100%.
And we could probably do this fairly quickly as well. And I know T-Mac would be
just to chime in. I don't think it's anything that will ever really. I mean, maybe I'm wrong, but I think this is more so almost
it doesn't need to be publicly promoted. We don't need to do a public announcement, but having that as a place of accessibility is pretty unique.
Yeah, let's definitely talk about how people in our community could fuck themselves first. So
yeah. I'm saying this is more of like something for like a couple dozen people, not something that would ever really, in my opinion, drive traffic to, unless we did it completely separate from our market hackers community. Which in that case, with the white labeling, I wouldn't necessarily even want the liability of having that tied to the market hackers brand as like an official lender. Maybe it was like market hackers partners with FundWise or something like that, and we throw some of our branding on it too. But anyway, that's another topic.
Yeah, and again, we don't want to partner with individuals that are just throwing stuff at the wall. And I mean, there's a ton of people. Just to give you some example, there's a ton of people that are out there, like in the drop shipping community, that are just not providing a service to clients that we turn down to work with them, right? Just because we don't want them, just like you said, Cameron, we don't want them to go out there and completely just bend themselves over. And then it makes us look bad because we were the ones that provided the money for them, regardless of what the educational program is. And so whatever we need to do to facilitate it to where the client 100% knows, hey, this is what's going on. And in our agreements, I mean, we've had several attorneys look at our agreements to have the client understand that they're fully 100% responsible for the money and what they do with it, right? But it just is a matter of how do we mesh those communities together. And like, I don't know what your name was, Nat, but again, like you said, obviously we want to get to clients that maybe it's just the top dudes that need extra money to put into their systems, or maybe it's just an option for them to be able to do it as a side opt-in, away from marketing hackers, so that it's not liability-wise to you guys and to us as well.
And also, where people kind of get pissed off in this industry is if they lose money, they're like, man, I didn't get anything out of it. I put $1,000 into this, or I thought I bought tokens or coins, and now I don't have any, or now they're worth nothing. They don't feel they got anything. But with FundWise, they got a $5,000 loan. They got the money. So it's like, you got your money. So, I think they're actually getting a product here, and it's not something, well, hopefully, whatever they choose to do with their money is their own business.
Yep, that's
totally.
Okay.
I don't know. I'll go, Cam.
I was going to dive a little bit. I wanted to talk a little bit more about if you could give another example on somebody who, like, let's say, I know you can't guarantee this because they're not going through your process, but someone who's, let's say they're making over $10K a month, and they have they have like a little bit above a 600 credit score. What do you think that person? I know that there's probably some other factors. Can you talk about those factors and talk about that person? Because I think we're gonna have a good amount of those people in our.
Yeah, so if, like you're saying, if the client has a little bit lower credit scores, but they have business revenue, right, of $10,000 or more a month,
yeah,
that type of person can get, you can estimate about 2 times their monthly revenue. So they might be able to get a $20,000 or $30,000 working capital loan. But like Dean said, those interest, that's going to be out of the 0% period because now it's going to be a business loan. So those interest rates could be anywhere from 15 to 40%. But that's a first-time loan with their business, right? And so if we can get them one loan and then they can continue to move forward with the process, they're just going to get better rates down the road because they've been able to establish themselves with a lender we can go back to the lender in 6 months and give them a better rate and get a better return on their money as well. So it's a matter of getting someone started in the process, whether that's 0% funding or whether that's a working capital loan to get them where they need to go.
Okay, so what's
Is there a certain period of time you have to provide proof of income for that, your monthly salary or your monthly income?
At least 6 months of bank statements through their business bank account of $10,000 or more a month, and the entity has to be established for at least 1 year.
Okay.
Do you ever go off of stated income?
For the 0% program, yes.
Okay.
Yep.
Dan, you're saying stated income, like I'm just claiming that I make this income?
Right. You're just stating what you make.
Could
Right.
you? Is there? I'm very fresh to this call. I'm sure I could probably find this out on the website. Which, if that's the answer, then we can spend some time there. Is there? Could you send us maybe, or is there somewhere we can go to find okay, you've got these are the the 2 or 3 processes for for us to filter and find out who is the niche client, at least for our specific community and the people that we would maybe want to send here. You've got I don't know what you'd call it, right? Your credit card option, and then you've got your small business loan. Is there a list of credentials that you could send us to say, hey, if you have this, it's worth it to apply for this, basically.
Yeah, you bet. I'll let's do this, Dan. If you could get me, you want me to send it to you, Dan, and then you can forward it out to everybody, or how do you want to do that?
Yeah.
That works.
Okay. Yeah, so I'll just get you a list of qualifications, right? We have that already built out, but I'll make it look a little bit better so you guys can understand it. Just qualifications for 0% funding, and then qualifications for business funding as well.
Sweet. That'd be great.
Any other questions?
I don't think I have any more questions. I guess the only thing, I'm just from a curiosity perspective, and you can, I don't know how much you can share. I worked at a VC fund for a year and just kind of with a fly on the wall and learned a lot. And so I'm somewhat familiar with funding, but we didn't do really like loans. It was more for equity.
Equity based, yeah.
And I was actually based out of Salt Lake as well. But what it sounds like the value prop that you've created, or like your actual value that you're bringing to the marketplace for your company funding wise, is I've identified maybe the main thing, number one, which is your proprietary algorithms that basically optimize the process for someone to get funding, like small scale funding via credit cards versus them throwing crap at the wall and seeing what sticks. You run this algorithm and you say, okay, this is the highest probability if we apply for these, versus them applying for one and things are credit, and then they maybe apply for 5 or 10 and they get like 1 or 2. So that seems like that's it. And then what other, like, I'm just curious from a business perspective, what other monetization methods do you like? What's your model? I guess, like, what's the model for funding wise? Do you guys get kickback from like the lenders? I'm sure that there's a small portion there, and then the value is really like that algorithm. It seems like.
It is, yeah. And so we've kind of positioned ourselves as a marketplace to be able to get a client who cannot go out to a VC company or who doesn't qualify for like a working capital loan yet, in a position that they can go and do something with it, right? So prime example of this, right? We helped a guy here out of Utah. He's a buddy that graduated with us at BYU. He started a chocolate bar that got picked up by Costco. And Costco pre-ordered $180,000 worth of this chocolate bar to go in like 15 stores. But Costco wanted 50% of that $180,000 up front. Well, he's brand new out of college. He doesn't have any of that money. So he was able to leverage his mom and his credit profile to get the amount that he needed to put down as a down payment for the Costco order, right? Now, once he gets that first order, he'll be able to go get an invoice factoring, no problem, and be able to continue to float that money through and through and through. But we have positioned ourselves where we can be that startup funding for those type of businesses or those types of clients, where they can put that money into a project that they're working on, right? And then what we've done just this last 6 months is we've added this business funding side, where that client can come back to us now and we can leverage their revenues, their invoices based off of Costco and what their receivable rates are when they pay back, to really position themselves to get more money that they can dump into their business and then continue to grow. So we've been able to monetize it that way. And one of the biggest ways that we monetize is that we charge on the back end once funding is completed a percentage or a performance-based fee after funding is completed that they can just roll into the lines of credit or into the funding that we help the client secure. So there's no out of pocket for them to have to worry about putting up thousands of dollars to get this type of money. We just take it off the top end, just like a closing cost on a mortgage, that then they can use and then position themselves to further their business, whether that's getting more money in the future or whatever it may be.
Gotcha. Cool. Sweet.
Yeah. And we could go on for days, right? There's a variety of ways.
Yeah, there's a lot of values that you get. I mean, you have, you've got you got a farming program for, you got a mastermind relationships you're building, with new startups and entrepreneurs that you can funnel into different connections out there in Utah and different funding sources. I'm sure there's a lot of verticals that you're kind of behind the scenes almost too. So, but that's cool.
Their commission structure is very solid. I know Cameron doesn't want to get into it right now, but I will just say their commissions are very solid.
Yeah, they're pretty cool. Pretty good. Mitch, so just to be very clear on let's say $20,000 loan, I'm able to qualify for that. I get this check in the mail or however you guys send it to me. I would then put it. My plan is to put it into a trading account. So that I'm charged the interest, I guess, on that is, you said 2% or 3%, or is it a month?
Yep. So good question. So I'll break it down for you. So if I got you $20,000, that would come to you in the form of 4 or 5 credit cards, right? So you'd have 4 different credit cards of maybe $5,000 each, up to $20,000. So you would have a total of $20,000 available to you to spend. Our fee is 9%. So you would pay FundWise $1,800 for helping you secure $20,000. So you would have $18,200 to use for market hackers, right? If you went and spent all $18,000, your monthly payment would be $364.
And that's interest-free, though, right? Assuming that's what he got. Could be interest-free for up to 18 months.
So you'll be 0% interest for up to 18 months. So you pay $364 your first month. That during the introductory period of 0%, your payment every month of 2% of the balance goes right to principal. So this month you paid $364 to $18,200. Next month's principal would be $17,830, right?
Okay, got it.
So each month during the introductory period, your principal balance will go down, and if you start to make more money within your account, you can take more of that out and pay bigger chunks of that $18,200 down. There's no prepayment penalty. You can pay it off as fast as possible. And the most beautiful thing of the entire program is that $18,200 or that $20,000. Once you pay that balance to zero, you have that immediately back to you to use it over and over and over again.
So if I paid that back, so if I was to pay that off in, let's say, 4-ish months, then I would be back to an availability of $20K.
Correct. Yep.
Ooh, that's that. Okay, glad I.
Yeah, but I want to go back to the minimum payment per month. During the first year, the first 12 months. Is it 0? Is it 1%? Or is it 2%?
It's 2%. Let's just go 2%. That's the easiest way for you guys to understand it. It's usually like 1.5, but 2% is easy for math, right? So your payment per month is 2% of the balance on the lines of credit.
Yes. Yeah. But you did mention that you're talking about the interest, but there is no interest for 1 year. And I know that those interests compound if there is no payment.
No, so the interest is not retro back to what your balance is. The interest is applied to the current balance at the end of the introductory period.
Oh, nice.
So if you're at 0% for 15 months, but you still have a $10,000 balance at month 16, your interest is applied to that $10,000 amount, but you still have a 2% monthly payment. It's just based off of that $10,000 plus the interest. And now your payment isn't going, your $300 payment isn't going right to principal anymore. Now it's 180 is going to principal and 160 is going to interest.
And that's nice because some credit cards will give you like 12 months interest free, and you're racking up $10,000 in credit card fees. And then when month 13, but they'll retroactive the interest for the last, from the last 12 months that you didn't pay interest. So that's nice that this does not do that. That's pretty cool.
Yeah. Yeah.
All right, you guys have any other questions or?
PK, I know you had some specific questions on you said you were a little bit cash poor and you were thinking, okay, how could I have some assets and so on and so forth. Did you want to dive into some of the specifics?
Well, in my case, I'm in real estate, so I can be rich one month and I can be poor 2 months later or 3 months later. So how do you calculate or how do you look at realtors or people like me who are self-employed and who have a decent income but is looking for a cash influx for investment purposes?
Yeah, good question. So depending on what you're looking for, we have some lenders that will lend based off of the asset for the property. Are you trying to get more money to purchase real estate, or are you trying to get more money to put into market hackers? What are you trying to do? Or both?
It's to put into investment in general.
Okay. So you can just use just your credit score and your credit profile to get 0% money. We don't need to know anything about your income as far as where you're at in the properties that you own. We can leverage just your credit profile to be able to do that. And this is what Dane talked about earlier. We can go off a stated income because they're just looking at what is your income projected for the next 12 months when you apply for these types of 0% lines. And that could be if I get $50,000 and if I can put that into 3 or 4 investments, well, PK, you know that if I can put $50,000 into something, I'm going to get $200,000 in return. So you can project that your income for the year is going to be $180,000.
Yeah.
So those applications with the funding manager, that would be the income that you would fill out in the projected income statement on the application that you can then use to then leverage your income plus your 0% application to get you a 0% funding.
And do you come by the stated income with a credit check then?
Yeah. So we'll do a soft credit check with all 3 bureaus just to see what your credit scores and credit history are, and then yes, we can do stated income on the applications at that point.
So strictly on the credit score, you can determine what the payment would be, or what the
pre-approval amount would be. Yes.
What the pre-approval amount would be. Okay. Does the credit check does it reflect the assets that are owned by the individual?
If you have a mortgage out on those properties, then yes. If you have it with private investors, then no. If you own an asset that is reported to the credit agencies, 100% yes, we will be able to see that. We actually own the credit report monitoring software that we use, and so we've tailored it to what we need to see to get you the most accurate pre-approval. So it's going to pull all the detailed information that we personally need to get you underwritten.
Yeah.
So again, it just kind of depends on what's on the credit profile. But yeah, we take that all into effect to see exactly what you need. As far as real estate goes too, we do have different lenders that can lend based off of the asset of the property. So if you have a property in mind that's worth more than $100,000, we can lend up to 85% of that asset, and then 100% of the rehab costs as well.
Even on investment property, though? Even on investment property? Or do you have different setup or structure for personal property and investment property?
It's all the same. Yeah, we have lenders that will do it off of personal and also off of investment property.
Okay. Well, I don't have any more questions. Thank you.
Yep.
Awesome. Mitch, once again, thanks for your time.
Yeah.
I hold on a second. I got one more question. I think I asked this a little bit ago, or last time we were on the call, but I forgot your answer. How would I get the money off the couple credit cards, 3, 4, 5 credit cards? How would I get it off so I can kind of think as to how I'd get it into my trading account?
Yeah, so some of the lenders will provide you with a check that you can just write yourself a check for the amount that you need that you can deposit in your bank account. We also have some partners that we can just cash the cards out and they send you a check in the mail for the total amount that you need. So there's a variety of ways that we can do it. We can pull all the amount of the money off. I would tell you from my position, I wouldn't pull 100% of the money off just because you don't want to hurt your credit score. I'd pull 50% off so that way you can keep your utilization right at 50%, so it doesn't kill your credit score, right? But there are some strategic ways to do that. But just know that we can get the cash off of the cards if you need it to. And I would say 50% of the cards that we get you come with a book of checks anyways. That you can just write yourself a check and then deposit that cash into your account. Very easy to do.
Okay, awesome. That's all for me. Thanks again, Dave, for setting this up.
Absolutely.
Thanks, Mark.
Mitch, thanks so much, PK.
Thanks.
We'll be in touch.
I'll send you that qualification sheet here in just a minute, Dan.
Yes, great. Thank you, Mitch.
All right,
Talk soon, guys.
Talk to you soon.
All right, bye-bye.